Hello everybody, this is Lara with your end of the week video for the S&P 500 for the trading week ending Friday 11th of December 2020. This analysis for the S&P 500 is really bullish. I expect the low of 30th of October to most likely not be breached for months or years. I do have a more immediately bearish wave count because I do like to always consider alternates. That alternate needs two new lows. It needs a new low below now, 358116, and then 354985. Elliott Wave analysis first, classic analysis last. This is my main wave count, and it has good strong support from classic technical analysis. This wave count expects the bull market for the S&P, the US indices, has resumed back down here, and it's going to continue for another a couple of years, maybe up to 5 years possibly, to complete cycle wave 5. A wave at cycle degree for this market usually lasts 1 to 7 years. Can be a bit longer though, because this particular market does have a strong bullish bias. Cycle wave 5 in Elliott Wave terms has to subdivide as a 5-wave motive structure, most likely an impulse, and within it primary waves 1 and 2 may be complete, and primary wave 3 may have begun here. It may only subdivide as an impulse, and we should see its subdivisions clearly at the weekly chart level. So far, intermediate 1 and 2 may be complete. Intermediate 3 needs to continue higher to complete its structure, and then intermediate 4 should unfold and remain above wave 1 price territory. And then intermediate 5 should move beyond the end of 3 to avoid a truncation. Primary wave 3 has to move higher to allow room for primary 4 to unfold and remain above wave 1 price territory. In regular technical analysis terms, we call this a breakout, moving away, and a test of support before continuing to move away. The Elliott wave gives those ideas and those normal price behaviours structure in terms of Elliott wave counts. Within intermediate 3, no second wave correction may move beyond its start. This weekly channel is important. If we see any deeper pullbacks, look out for strong support at the lower edge of this channel. If this channel is breached, then I would more seriously consider that alternate, but we're not there yet. Okay, let's take a look now at the daily chart. We're going to look from the high labelled primary 1 over here. Here's primary 1, here's primary 2. I had expected primary 2 to last longer. It's a bit more brief than I'd expected, although I had warned it didn't necessarily have to be brief. If we look back at the price history of the S&P coming up off important lows after big bearish movements, I think I looked at the beginning of the movement up following the dot-com crash and the beginning of the big move up following the 1987 flash crash in October 1987. Within those big moves, the first multi-week pullback wasn't actually particularly deep. They were both around about the 30 to 40% of the first upward move. And so I hadn't expected primary 2 to be particularly deep, but I did think it was going to be a bit more long-lasting than that. It's also rather brief. That's okay. We're getting movement up and away, which is exactly what this wave count's been expecting. The structure of intermediate 3 in Elliott wave terms should be a 5-wave impulse. 1, 2, 3, 4, 5. Sorry, that's primary 3. And likewise, intermediate 3 within it should be a 5-wave impulse. So should all of these third waves. This wave count now considers that we may have moved through the middle of this big third wave. If this wave count is wrong, it's not going to be bullish enough. Classic technical analysis at this stage is pretty bullish. Here's the end of intermediate 2, the start of intermediate 3 with minor 1, 2, 3 incomplete, and then 4 and 5. When intermediate 3 is complete, intermediate 4 may not move into intermediate 1 price territory below the new invalidation point. Price has moved really far enough away now for me to move the invalidation point at the daily chart level up from down here. I have 2 hourly charts for you. Following on from labelling at the daily chart level, here's minuet 1 and 2, and now this first count considers minuet 3 over at the last high, and this downward movement of the last 3 sessions, minuet 4, which may not move into wave 1 price territory below the short-term invalidation point. The best fit channel is really important. It's the same on both hourly charts and the daily chart. If we do get some more downward movement, look out for support at the lower edge of this channel. If this wave count is correct, then minuet 5 would reach equality in length with minuet 1 at the short-term target. At that point, we would expect another consolidation or pullback to relieve extreme conditions. Likewise, the target for intermediate 3 is where another consolidation or pullback may begin, and the target for primary 3 also another bigger consolidation or pullback may begin. Alternatively, we can label this impulse a little bit differently. So it's the same at this point down here, and now it's possible to see minute wave 3, 1 degree higher, complete, and this downward movement could be minute wave 4, not minuet wave 4. Minute wave 4 could be over here as a single zigzag, and if it's going to remain within the best fit channel, then it should be over there. If it continues further as a double zigzag, which it could technically, then it can't move into minute wave 1 price territory below this invalidation point. The S&P likes to form rounded tops, and sometimes its fourth waves will breach channels, and then price will turn around and continue on to make new all-time highs as it forms those rounded tops. And so a breach of this channel would still see this wave count, the main wave count, rather than my alternate daily chart, which we'll get to next, which is much more bearish, because it would actually see quite normal behaviour from this market. But in the first instance, let's look for support at the lower edge of this trend line. My mid and longer term targets are exactly the same for both hourly charts, and both of them are entirely valid. These are both entirely valid ways to label this upward impulse. At the daily chart level, this is an alternate wave count. Consider all possibilities. I don't like to be left without an alternate wave count. This is a more immediately bearish wave count, and it has a reasonable probability, not a very good, no, it doesn't have a reasonable probability. It doesn't have a very good probability. The first main wave count has good, strong support from market breadth. There is not enough weakness in this upward movement for this to look like a normal behaviour for a B wave. And so this wave count does not have a reasonable probability. However, in technical Elliott wave terms, it does have a reasonably good look. Primary 2 might not be over there. It could be continuing further as an expanded flat correction. Expanded flats are labelled A, B, C, and they subdivide 3, 3, 5. The B wave of an expanded flat moves beyond the start of the A wave, and then the C wave moves beyond the end of the A wave. The target here is for C to reach 1.618, the length of the A wave, which is a common Fibonacci ratio for a C wave within an expanded flat. Invalidation points for my main wave counts will provide confidence points for this alternate. If my hourly charts are invalidated with a new low below the first confidence point, it's at that point I'm going to a bit more seriously consider this alternate wave count. But it really does need a new low below this point for reasonable confidence in it. If that happens, then I will have confidence in this target. But while price remains above the second confidence point, there will be other explanations that fit with normal behaviour of this market to form rounded tops. I hope that explanation wasn't too confusing, and I hope it makes sense. At the weekly chart level this week, we have an upward week, a higher high and a higher low. It's closed red though, and a little bit of a decline in volume. On balance, volume turns down from resistance, giving us a weak bearish signal. On balance, volume is constrained. No breakout yet for a stronger signal. If we do see a bit more downward movement, look out for reasonable support about 3,600. RSI is still in neutral territory. There's still room for price to rise. ADX at the weekly chart level is indicating an upward trend which is nowhere near extreme, still in a reasonably early stage. This supports a bullish Elliott wave count. MACD is full bore bullish. ATR declining as price moves higher is absolutely normal behaviour for this market and of no concern whatsoever. It does tend to do that, and it will do it sustainably. It's also, rather oddly for some years now, been we've seen price rising on light and declining volume. And so as price moves higher, I'm not concerned to see volume declining. When you look at this market, this bull market beginning in March 2009, on a monthly chart, that's especially apparent. I think what that means is eventually when the bull market turns and we see a bear market, support below is going to be quite thin and we're going to see some pretty explosive, even more than normal, downward movement. We are not there yet though. The setup required for a more sustainable high in place is not there yet. For the short term, we had a bearish engulfing candlestick pattern 3 sessions ago, which had a bit of a push from volume, but it hasn't been followed through with reasonably good downward movement. We've got a couple of small range days that have both closed green, and now we've got this long lower wick on Friday's candlestick. It looks like support about 3645 may hold, and this may be all that results from that bearish engulfing candlestick pattern. And that's one thing about bearish candlestick or candlestick reversal patterns. They make no comment on 2 things. They make no comment on the next direction from price, and they make no comment on how long the next direction may last. There are 3 directions for price: up, down, and sideways. So if we have an upward trend and we get a bearish candlestick pattern, it tells us either the upward trend could be interrupted by a small sideways movement, or we could have a full 180-degree reversal. It doesn't tell us which of those 2 situations we could have. In order to consider which of those 2 situations may be most likely, then we really do need to look at other indicators and the situation with price. And here we had an upward trend, nowhere near extreme in a reasonably early stage. RSI not overbought, plenty of room for the upward trend to continue. This may be just another normal and to be expected pullback within an ongoing upward trend. From this low back here, we have a series of higher highs and higher lows, the basic definition of an upward trend. If the black ADX line again turns up, it will again indicate an upward trend. ATR declining as price moves higher, again normal and to be expected for this particular market. This is a slight cause for concern though, and may offer just a little bit of support to that more bearish Elliott Wave count. On balance, volume has broken below support. This support line is virtually horizontal, it's long held, and it's got 5 tests, so that's a reasonable number of tests. And so this is a reasonable bearish signal. However, it could turn around and move back above that line. It did that here, it moved below, test resistance, and then broke back above. So we could have a situation like that again. And here's another one like this. We don't quite know yet. Let's look at these support lines if we do get a little bit more of a pullback in price. But overall, there's still an upward trend in place, and that's at the weekly chart level. RSI at the daily chart level is still neutral, plenty of room for price to rise or fall. MACD gives us a bearish crossover, also offering the very tiniest little bit of support to that alternate Elliott Wave count. But overall, this chart is bullish and offers more support to the main Elliott Wave count. What about breadth and volatility? At the weekly chart level this week, an upward movement from price, although it did close red, a very slight increase in the AD line to new all-time highs. Price is moving higher with support from rising underlying market breadth. This is very bullish. There is absolutely no divergence between price and the AD line, so I do not expect a huge bear market to be in the wings anytime in the immediate future. Normally, a large bear market, like the one I'm expecting will come in another 1 or few years, is preceded by a minimum of 4 months bearish divergence between price and the AD line. The less divergence, the shallower the bear market. There's a positive correlation there. Here, with no divergence, I do not expect a big bear market to begin. This is very bullish. At the daily chart level, we had bullish divergence on Thursday, and the AD line has made new all-time highs on the 10th of December, and Lowry's operating company's only AD line has also made new all-time highs on that date. This rise in price comes with a normal corresponding rise in breadth. Breadth is rising to support the rise in price. This is bullish. This single instance of bullish divergence here has been followed by a downward day, but it's closed green. This chart is bullish and supports the main bullish Elliott Wave count. At the weekly chart level, however, some bearishness from inverted VIX. There's well over 3 years of bearish divergence between price and inverted VIX. It's not proving to be particularly useful as a timing tool as to when the bull market may end, and it may continue to develop for further years before the bull market ends. For the short term, inverted VIX has moved lower this week, price has moved higher. Upward movement this week from price does not come with a normal corresponding decline in VIX. VIX is elevated, as is VVIX. This divergence for the short term is bearish and may offer a little support to the alternate Elliott Wave count, but I'm not going to give it much weight because it just hasn't proven to be particularly reliable of late. There is now a cluster of bearish short-term divergence at the daily chart level between price and inverted VIX. Again, may offer a little bit of support to that alternate Elliott Wave count. But for that Elliott Wave count, I want those very specific confidence points breached before I really have confidence in it. While price remains with higher highs and higher lows, let's expect the upward trend is most likely continuing, and it's on up toward those targets. That's all from me this week with your S&P analysis. I hope all our members are well and happy.